Hello and welcome to another update video about XRP. Yeah, as already mentioned yesterday, we've seen the break below the 66 cent level. That gives us some clarity with regards to which scenario we are in. At least we're making some progress here on the chart. The 66 cent level was broken, which as long as we had it and as long as price was above it, there was a potential for another rally to the upside that could have given us here a local 5-wave move to the upside. XRP was not motivated to do that, and so far it has been the right decision not to call a local low in place. You will remember we were starting to track here a potential 5-wave move up to get some clarity, but XRP failed. That could have been seen as a first signal that we're not going to get 5 waves up, and that was basically a failure of a pattern to indicate that a low was in place. So XRP remains a chart that we need to be very cautious with. You will remember a lot of people got very bullish about XRP recently when we had the news. We saw that ridiculous spike. I was also starting to track bullish scenarios, but it's always very important when we then in the retracement that we need to wait for the first signal that a low is in place. That's across the altcoin market at the moment. So far, I think there's only 1 or 2 coins that where I would say they could have bottomed already. But I would need to look at the chart. I haven't checked them today. We're dealing with GMX here and Aave. But overall, since this correction here started on the XRP chart, it hasn't really shown us any impulses to the upside, which means we cannot confirm a low is in place. We can still not confirm that a low is in place. However, what we can do, we can be watching these relevant support levels now that are part of the retracement zone in this scenario, in which I now see it as a part of a potential wave 4, a larger degree wave 4. But I can tell you, if price does not hold this support area, I haven't got anything bullish left on this chart. And support here is between 56.5 cents and 62.5, you could say, 62.3 cents and 56.5 cents. So between the 50% retracement level and the golden ratio, the 61.8 retracement level, and you're looking at the micro count here of a potential wave 4 in a WXY structure. The Y wave consists of A, B, C, and we could now be in the C wave to the downside. And in the C wave, one more low might happen, okay? Which means we need to be watching after that next low if indeed a low is in place. At the moment, I would consider any bounce from here, this wave 4, and it would really take a break. So this would just be a corrective rally, okay? And it would really take a break above the wave 2 high of 70.6 cents to have a fairly strong indication that some kind of a low is in place. But at the same time, it will depend on the structure that the price is unfolding with, because the structure needs to be an impulse. Yeah, it needs to be or some kind of a 5-wave move up, because it could just be a correction. I mean, nothing stopping price to form a huge triangle pattern here, for example. Yeah, that's something, however, that I wouldn't track yet. It's way too early to track a triangle count. It will depend on what happens when we go up. If the move up is corrective, then we can think about a possible triangle structure. But at the moment, yeah, it's just coming down here. It's coming down quite impulsively, but that could be the C wave which is unfolding here as part of that larger correction. So yeah, I would pay attention to 56.5 cents and 62.3. What we can also be watching are relevant Fibonacci extension levels. So let me put them on the chart as well. So how can we do that? So we can take the length of the wave W, we go to the high of the X wave, and then the 1-to-1 ratio is going to be interesting, 60.6 cents. We've nearly touched it already. That's the 1-to-1 ratio. Let me actually add that to the chart. Maybe we will see a reaction again. And then we can also take the length of the A wave. Okay. Length of the A wave, we go to the high of the B wave. And also here the 1-to-1 ratio is going to be interesting. That is at 57.8 cents. So what I'm essentially telling you is unchanged from previous updates, that price is in a correction, likely, okay, at least we're tracking that. However, I cannot confirm a low in place, and we cannot confirm a low in place until we see an impulsive reaction to one of these relevant support levels. Yeah. Context is very important in Elliott Wave and on charts, and you know that my interpretation of this chart is not overly bullish long term or medium term. The reason is that of this swing low that was made in January, just loading. Yeah, so in January we had a low at around 32 cents somewhere here. Yeah, and the rally since then has not been a 5-wave structure. So far I only see 3 waves up, okay? And we eventually need the 5 waves to really confirm that a lasting low is in place. I mean, for most people who want really a hands-off approach, who are not watching the charts every day, for most people, it's interesting to understand, okay, are we actually in a longer term uptrend? And market structure is always the same. So what we need to see is that 5-wave move up to the upside, followed by a 3-wave pullback. If we get the first 5 up, and we haven't got them yet, then a pullback zone will be a reliable trade setup. Until then, everything is very fragile. So don't be surprised at all if here any support levels break. I mean, essentially my approach is the following. I'm watching these relevant support levels. I'm tracking scenarios here. I'm watching the relevant Fibonacci levels that the wave counts reveal. If we see any reactions to them, then yeah, we can use the structure to indicate micro degree trade setups or whatever. At least we can indicate that one more high is likely happening. But until we see such a reaction, so far we haven't seen one, I can't call a low in place, right? And we have to expect that the correction is continuing to unfold. However, we now, if we look at the indicators, yeah, let me go to the indicators here. We're now on the 4-hour. Let me go to the daily chart. So you can see that the MACD, just picking that here, 1 second. You can see that the MACD is still deep in the red, very deep in the red. So negative momentum increasing, especially after the break of the support level. The RSI on the daily can still drop a little lower though. So there's still space. It's now at 40. But can still obviously unfold further to the downside. It's not oversold yet because it was so much overbought, okay? But the 4-hour is now oversold. So that could indicate a larger bounce is coming to the upside. In a correction, we always need to be ready for potential bounces. But if we're dealing here really with an ABC structure, then I would expect here just a short bounce in a 4th wave before we come down in a 5th. But just be aware that a break above the 70.5 cent level would probably, well, would force at least a wave count change on the microstructure. I would not be able to tell you now if it means something bullish. That will depend on the structure at the time, which is why it's so important to get regular updates. Yeah, I mean, you need to understand this could always be a WXY structure which is unfolding. So you sometimes don't get that last low. So if we're looking at the 4-hour chart, I mean, it's deeply oversold. So some kind of a relief rally is due either now or after one more smaller low. And we're approaching a support range now, yeah? We're very deep in the orange support box now anyway. So you have support here basically between 56 cents and, well, where the price is currently at 62. Alright, that's my update about XRP. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.